Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slade Points, California, DBO 1666881.
She's a mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call Mom.
All right, well, welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and as always, I've got Miss Heidi Schlegel Points with me. How you doing, Heidi?
I'm good. How are you?
I am good. So we are Mortgage Mom Radio, and what do we do? Well, we bring you all of the information and advice that you need around mortgage financing, real estate, all that good, happy stuff. And we want to make sure that everybody that is watching is putting your questions or are putting your questions in the feed so that we can read those out loud and we can answer those questions for you. If you're watching us, say hello. Give us a big thumbs up. Say hi. Let us know that you're there. We have no idea if you're there. If you don't say something, put it into the feed. For those of you that are listening to this at a later date on radio, we are live at 5 every single Wednesday on YouTube. All you've got to do is search Mortgage Mom Radio and subscribe to the channel. Click the notification button. It's that bell. And you've got to click it twice to get to the all. That way you know when we've gone live, it will alert you, and you guys can click right in and see the live stream. So this is the beginning of the show, and we always do our little bit of catching up with Mom. We've been super busy, so haven't been able to do that. I hate that you're in Mesa. You're killing me, Miss Arizona. I don't get to see you every day the way that we used to.
I know what I messaged you the other day. I was like, I miss you. I love you.
Yeah.
What are you doing?
It's so lonely.
I know. Well, it was lonely. It was quiet in my house.
We already have a few hellos. Aunt Pam on YouTube says, hi, Aunt Pam loves you all. And then also said, that's what she said, but I think I missed what that's for. Soleil says, hi, girls. And Aunt Pam says, put it in.
All right. Well, Soleil, thank you so much for watching us as usual. It was lovely having a conversation with you. I think it was yesterday. I don't know. The week is just all like it's a blur, right? You forget who you talked to on what day. But we did talk this week, and we're going to be able to help her when she's ready. It was pretty amazing. So looking forward to that. It looks like Aunt Lori said hi. Hi, Aunt Lori. So again, my family, our biggest fans. I love it. And for all
Aunt Pam, hi, Aunt Lori.
There you go. So, if you guys are listening at a later date, please make sure that you guys tune in. If it's really hard for you to get to it on Wednesdays, we totally understand. I do want you to know that if you put a question into the feed, if you're watching a video at a later date, we will get that notification that that question is there, and we will go back and we will answer the question for you. So please don't hesitate to do that. But the only way to get your questions to us live is to watch us on Wednesdays live at 5. So you guys need to make sure that you do that. Really, we've got a ton of advice for you, very important information. We're coming to you in all directions. So Heidi, I do want to let everybody know about our quick conversation right before the show went on, which was really funny. So I don't get to have Heidi with me anymore. She's not in the background. So let me just explain that when I'm on the phone with a client, she can hear it. And I talk on speakerphone. There's nobody in the office but Matthew and my son, Manny. When Heidi was here, it was Heidi. Everybody else is working at home, so I've got everything on speaker. It's kind of cool. I can just talk. So Heidi could hear conversations that I was having with people. So she had a gist of what was happening, right? Now she's in she's in Arizona and I'm in California, and she's getting these loans, and I'm just assuming that she's in my brain somewhere.
Yes, that's happening more often than it used to.
Yes. Makes it a little bit more difficult. I do try to take really, really good notes, and I do. Every single brand new client that I talk to, I take notes throughout the entire conversation. But when it's a client that comes back that I've worked with before, and I just take the phone call and we start with, hey, how are you and how are things going? Oh, yeah, sure. What are you looking for this time? I don't remember to start typing, hey, this is what we're doing this time. So, she's like, can you let me know what I'm looking at here? Are we doing cash out? Are we just lowering the interest rate? What are we trying to do? And I'm like, have you seen the movie Pacific Rim? Because we need one of those machines where we can just brain meld, right?
Right.
That would be pretty amazing. Somebody's got to come up with that invention. Like, seriously.
It would be very helpful for so many reasons for us.
Right.
But so dangerous for so many others. And I'll leave that for the after dark part.
There you go.
But yes, it was funny because I actually thought I had lost my mind today. And so I'm messaging Debbie going, okay, maybe I've lost my brain. But what am I doing on this loan again?
Nah, I just made you lose your brain. That's my fault.
It's fine.
Over on YouTube, Soleil says, I was so excited to talk with Debbie this week.
Oh, thank you so much. And that just goes to show you, right, for everybody listening. I say it over and over again. 99% of the time when you call in and you make an appointment, you're going to talk to me. If you don't talk to me, you're going to talk to Carrie or you're going to talk to Heidi. So either way, you're getting to the team and I'm following every single loan that goes through. But the majority of the time, you're actually speaking with me. So don't hesitate. Pick up the phone, make an appointment. And if you absolutely 100% want to work with me, then just make sure that you tell Matt that when you call to make the appointment. I only want Debbie's calendar. If you're willing to wait for me a day or two, I would love to talk to you. So just throwing that out there. Thank you so much. I really appreciate that, Soleil. And that's not her name.
Oh, it's not?
No, it's not her name. She's actually really cute when you talk to her on the phone, but I'm not going to say her name out loud on air. But
Gotcha.
yeah, it's so great though, because it's like all these screen names, right? Like we don't know what their real names are. I mean, Houseboat Billy hasn't been on in a while.
Yeah.
I wish that he was, but anyway, he's always fun. So
We'll have to get him back.
I know. We got to
Always
get
had
these
good
people.
comments.
I know. Great comments. All right. So let's get to it. What do? We do home buyer education. That's the whole name of the game. I came out at the beginning of the year and I said that my goal this year, at the beginning of this year, obviously it won't go the entire year. There's just not that many steps to the process, but there's a good chunk, right, to buying a home. And last week we did unit 1, right? We just started with what are these terms? What do they mean? So this week we're going to talk about homeownership and benefits of homeownership, responsibilities of homeownership, adulting, right? Making sure that you're budgeting.
Ooh,
Right?
adulting.
Very adulting. It's fun. But so we're going to jump right into that. We're going to do that piece. When we get back, we're going to answer every single question. So anybody at all that is watching and listening and has questions, please put that into the feed. Do it as you see it, as you think about it. We're going to go back to the beginning of the questions and answer them all as they've come in. Heidi, I can tell you've got something you wanted to say.
I do. We didn't do catching up with mom. So tell me what your week was like, Debbie.
Oh, well, it's been working and working and working and working and going to work and coming home. But you know what was really exciting today? I have to tell everybody this. I know. You ready?
Yes.
So Zeke is in, I guess you'd call it pre-K. I don't think he's really in pre-K. He's in special education. I've said that before, that he's autistic. And we've actually, at one point in time, we had a meeting that they were talking about sending him to a totally different school. He is pretty high on the spectrum. He'll be 5 February 1st, and he is not talking yet and not potty trained. And we're working with a man, and we are working hard. And I got to give the kudos out to my husband, Shane. I mean, he has just been on top of it. Of course, they're not in school. They're Zooming. Try taking a 4-year-old that has absolutely no attention at all that he's going to sit and working with him. And the principal actually announced today that he was student of the week. Or the month, student of the month for all of Peachland Elementary School. So that was very exciting to get that text message. They said that he's just made improvements by leaps and bounds, and they're so proud of him that they had to give it to him.
That's amazing.
Yeah.
How exciting is that?
It was super exciting. And then this Saturday, Manny turns 20. It's his birthday, the big 2-0. I have no idea where time went. So that's catching up with mom. I've been, work, and mom, and not a whole lot more. Trying not to drink all my wine. That's all I'm saying.
Right, exactly.
How's your
delivery?
Right. How's your week been?
My week's good. Christopher finished driver's ed.
Ooh.
So we were waiting for the certificate to come.
Uh-huh.
now we just don't know what we have to do with it. Moving to a new state, you got to figure out all the new policies,
rules.
procedures, guidelines. Like,
Yeah.
So I have no idea what the next step is. So we're going to work on that.
Okay. Well, here in
And-
California, I did learn that Mikey got his permit, and I did learn that they are not legal to drive, even with that permit, until they've actually taken the student education driving courses. If he gets in an accident and you're driving, he's in your car and he's driving, and he hasn't done those classes yet, he is not legally allowed to drive, and your insurance will not be covering anything. Right. That's in California, so you might want to definitely double check Arizona to see if it's the same.
Well, that's what Christopher finished. So he got his certificate for that.
Okay,
and
so
my
you should be good.
understanding is now in Arizona, I just take that certificate and they give him his permit.
Okay.
He doesn't actually have to take a permit test. But I'm not positive. That's, coming from my 16-year-old son. So we'll figure that out. I'm in no big hurry. And my husband gets to move home.
He does. I'm super excited. Jeremy Points is coming to the Mortgage Mom radio team.
He is.
Yeah.
So he will be home on Saturday, which is also our oldest son's birthday. So he will
Nice.
be 24.
All right. Very good.
Yes.
Well, that is some
So-
serious catching up with mom there. It's just mom, right? It's all mom stuff.
Mom.
Well, Aunt Pam says, woot woot, Zeke.
Awesome. Thank you, Aunt Pam.
And she also says, happy birthday, Manny.
That's right, man. I got them all over
you
the
go.
place in every age group, right? Whew. Anyway, all right. So we ready to do this? Are we ready to get into some actual mortgage stuff?
We're definitely ready.
Okay,
Let's
so
go.
for everybody listening, please, if you guys have any questions through this piece of it, which it's not super long. Last week was actually longer. This week it's not super long, but it gives you some really good information. If you have questions throughout the piece, please put them into the feed. We're going to read those questions and we are going to answer them all. Anybody listening at a later date, remember that if you guys watch us on Wednesdays when we do this live, you guys can get your questions answered immediately just by putting questions into the feed. And then you'll actually hear your question on loud radio on Saturday morning. So definitely follow us. Go to YouTube, search Mortgage Mom Radio, click the subscribe button, click on the bell button twice. First time is to alert us, but then you got to select all so that you know exactly when we do go live. So you ready, Matt?
All right, let's go.
All right. Hi, welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and we are going to be going over our second unit of our Homebuyer Workshop 2021. Today, we're going to be talking about the benefits and responsibilities of homeownership. Now, if you find that these workshops are good for you, they're educational, you really enjoy them, please make sure that you hit that like button on the video and you subscribe to my channel. Also, turn on the notification button. You got to click that bell, and then you've got to hit it a second time and select all. I'm going to be bringing these workshops to you every single week for probably about the next 10 weeks. So we're going to try to put them into small pieces that you can take in and absorb. But if you want to know when the next one is uploaded, you got to make sure that you subscribe to the channel and that you hit that notification button. So let's go ahead. Let's jump in. Let's get started. And this is unit number 2, Homebuyer Workshop, benefits of homeownership and responsibilities. You know, it's with the benefit does come the responsibility. So we're going to go through those pieces. A couple of things that I want to talk about for you today before we get there. And let's see if we can make this thing work today. All right. So the first thing I want you guys to know is as you're out there and you're looking at homes, you're walking through a property with a real estate agent, or you're just window shopping on your Redfin or Zillow, Realtor.com, is you're probably going to want to know, well, what does this house cost me? Well, the easiest way to figure that out is to download our phone app. So text the word MOM to 36260, and you'll be able to use all of the tools that are in my app. They're fantastic. You can run your payments by putting in all of the different information, sales price, down payment, taxes, homeowner's insurance. If you don't know what to do, you can click that button in the app that says email me, and you can ask me the question, hey, Debbie, I'm looking at a property for $500,000. Can you tell me what would this cost me, or what numbers should I use? And I'm going to get those back to you. You want to watch YouTube? Click on the button. You guys want to listen to the show or listen to the podcast? We do put this up on podcast as well. click on the button. So it's really very simple. Lots of information in here, tons of information tools. So make sure you have it. Again, text the word mom to 36260 and you'll get an email or a text message from me with a link. All you've got to do is click on the link, save it to your home screen, and now you've got this valuable tool right at your fingertips. So let's go on to the next thing. How do you contact us? Because I'm sure you guys are learning how to buy a house right now. I'm giving you all kinds of educational advice. But maybe you want to get on my calendar. You want to talk with me one-on-one. That's really easy to do. You can call the office. Again, you can do that right from the phone app. Or the telephone number is 844-935-3634. You can follow us right here on YouTube. You can put questions into any of the, make a comment on any of the videos, and we're going to see that comment. We can always get back to you. Go to the website. It's mortgagemomradio.com. You can send me a message right through the website as well. So tons of ways to get a hold of me. As long as you search, Google search, Mortgage Mom Radio, our information's going to come up. But here we go. What are your benefits of homeownership? Let's just jump right into it. So on the screen, you're going to see that I actually have your 1098 form. What is that? Well, this is what you're going to get back from the bank at the end of the year. The most important piece is the tax savings in homeownership. So all of the interest and all of the property taxes that you pay on an annual basis, you get to write off from your gross income, the income that you have to file on your tax return. This is going to reduce the amount of taxes that you owe. So in essence, let's say that your normal refund is maybe a couple $1,000s. Maybe you usually owe money. Well, now that you own a property and you've got this deduction, maybe you're going to get a larger return, which should be the case. Or maybe you're not going to owe as much money, which should be the case. So this is going to be a really big piece of the puzzle for you as far as why should you own a home. And we're going to go a little bit into that a little bit later because I've got people that have asked me questions that I think are very beneficial for you to hear the scenario to try to understand. But at the end of the day, let's say that your refund goes up by $4,000 or $5,000. Take that money, divide by 12, and that monthly amount would be what you could put towards your mortgage payment to get to a little bit higher price home. You're kind of subsidizing yourself, and you're able to pay more than what you can in rent to own your home. So something that we can definitely talk about one-on-one. If you want to give me a call, get on my calendar, we can definitely go through those together. I can give you numbers that you can go back to your CPA or your tax advisor, and they can run that scenario for you and show you how your tax return would change by owning a home. So something to definitely keep in mind. One of the largest pieces of the puzzle are benefits of homeownership. So you can see on here that I have build wealth. Well, yes, you are building wealth. Just, as you've seen in recent days and recent years, property values increase. They go up in value. And even if we end up in a down market and property values drop, there is always that cyclical cycle where we go up and we come down. And when we go up again, we always surpass where we stopped the time before. So over time, and I've said this many times in the show, real estate is for the long haul. It is not a short-term investment. Sure, you could be a contractor. You could be purchasing a property that's in horrible shape. You could be fixing it up and you could be turning it around and flipping it. That does happen, absolutely, but that's more of an investment thing. This is a home buyer workshop for a first-time buyer. So what you have to remember is that over time, over the long haul, you are definitely building wealth by owning your home. You are building equity in the property. This is one of the pieces of many puzzles that you're going to put together in your retirement portfolio. You could eventually end up with this home having tons of equity. You could sell it, and that could be part of your retirement plan. You could rent it out, and you're going to be able to rent it for significantly more than what your monthly payment is at that point in time. You could turn it around and do a reverse mortgage where you're not making a payment but living in the property. There are lots of ways to look at real estate as building wealth, and that is something that definitely talking with a financial advisor to determine how it's going to fit into your portfolio is a great opportunity and a great option. But keep that in the back of your mind. You are definitely building wealth by owning real estate. Now, I have on here security. Why do I have security? Well, If you've ever rented a home before, and I'm sure if you don't own a property right now, you probably do, unless you're one of those very fortunate few that get to live in your parents' basement or, live with them for a very long time and not have to pay rent. But most of us have to move out and pay rent before we actually buy a house. Your landlord can issue you a notice to move, to vacate at any point in time. What if you're a family with little kids and you've got those kids at a particular elementary school and you don't want to leave, but now you've got this notice to vacate? Now you've got to try to find another property that might be for rent in your exact neighborhood to keep those kids in that school. Or, maybe you're not in a financial position that you could move. You're making it day by day, you're paying the rent, but you don't have a ton of extra money in the bank to go and rent another property and put down another security deposit. So this is building you security. You don't have to move unless you choose to move. Nobody can tell you that you need to vacate. Obviously, we're going to get into, what are your responsibilities of homeownership, and you could be foreclosed on if you don't make your payment. But if you continue to make your payment, nobody can tell you to leave. So that is the security of homeownership. The pride of ownership is the next piece on this slide. Pride of ownership is where you get to do what you want to this property. Redo your landscape, plant your garden, paint your walls, redo your flooring. These are all things that you get to do to your taste, and it's not something that you would really want to do to a rental property. You don't want to improve somebody else's home. You don't want to improve somebody else's wealth or future or financial future, their retirement plan. But when it's yours, you can go in there and you can put in the blood, sweat, and tears. You can paint your own walls and do it at your own time and at your own leisure. And you can go out and plant some flowers in that garden a little bit at a time. But it is your home, and it is a pride that you will feel just by owning that property. So I like to put that in there because I don't know about you, but I rented properties way back in the day, and I hated the carpet on the floor, or something needed to be replaced, but the landlord wasn't going to do it. Or, the garage door that broke and they put in a new one, but it's not insulated. So now my garage is hot. These are all things that you get to make those decisions and do it on your own time, but improve your property and be very prideful about it. So something good to keep in mind. Now, build good credit. This is another thing. If you continue to make those mortgage payments on time, you will see your credit improve. When you have a mortgage loan on your credit report, lenders are going to favor you more than somebody that doesn't. So a great example, we all know from listening to my show over and over again, I'm a big RVer. I love to go camping, and I had to buy that RV. And it actually took me 3 years of savings to finally be able to pull that trigger on my own. But now, if you own a home and you go to apply for an RV loan, it's a much simpler process to get that loan approved than it is if you don't. Lenders are looking for people that have consistency, making payments, that they're homeowners, they've got something to fall back on should times get tough. They could sell that home, they could take that equity. It's security for lenders. So you will find that your credit score will improve a bit. You will find that you're going to have a better opportunity at some better credit cards, and just overall, in general, you're going to have better options available to you when you are a homeowner. So these are really important things to keep in mind. These are the benefits of homeownership. Why should you buy a home, and why, should you, at least get that plan put together to be able to buy that property. Now, like I mentioned a little bit earlier, I wanted to kind of give a story that I hope will help resonate or come to play, especially in today's market, because property values are high right now. People are thinking, should I buy? Should I wait? Are the property values going to drop? Okay, so I had a client in December of 2020 that reached out, and she was very on the fence. She really, really wanted to buy, but she was scared. And quite honestly, I could understand why she was scared. The last house that she purchased was in 2008, and she bought at the absolute tip top of the market before everything came crashing down. She did sell that property. She took a loss, and she walked away. And now she's coming back December of 2020. Again, same idea. We're at the top of the market, at least we think. Our property value is going to drop. Should she just hold tight and should she wait a little bit longer? And what I told her, and I hope again that this really helps you guys and you can kind of think about this in a way that it makes sense. She sold that property in 2009. Had she kept that home, sure, property values dropped. She was upside down. She owed more on it than what it was worth. But from 2009 to 2020, which is 11 years, she didn't have the property tax deduction. She didn't have the mortgage interest deduction. She wasn't making payments on a loan towards that house. All of a sudden in 2010 is when we got our HARP refinances that came out, allowed people to refinance, drop their interest rates, even if their property values were upside down. So she would have had an opportunity to drop the interest rate and refinance the home into a cheaper payment. Not only that, but she could afford the house at the time. So the loss that she took when she sold it, maybe she shouldn't have, but she would have missed out on 11 years of write-offs in her income taxes. That is a lot of money. Not only that, she owned the house. She had her ownership. She could have done what she wanted. She wouldn't have been moving around from rental to rental. And on top of that, even further, think about where would her mortgage loan have been in 11 years from when she gave up. 11 years. She would have paid that mortgage balance down significantly. She would have owed a ton less money on that home today. She would have had all of those tax deductions that she gave up. Now, you go back to today, and what is that home worth today? Well, it's worth more than what she sold it for when she did. And it's worth more than what she bought it for when she did. So again, please keep this in mind. Let it resonate. Property values go up, property values come down. But when they go back up again, they will always surpass where they left off. Owning a home, no matter when you buy, is never a bad idea, ever. There is never a bad time to buy. There is just a bad time to sell. So please keep that in mind. This is my story of the day. If you have any questions, please reach out. I'm more than happy to answer them for you. You want to get on my calendar. You want to talk to me direct. I am here. I'm a real person. I'm doing this for a living. So call the office. It's 844-935-3634. If you're enjoying this information, like I said at the beginning, if you feel like this is educational, it's getting you pumped up and ready to go, thinking you might want to get that game plan put into place, please hit the like button on this video. It really, really does help me out a lot. And if you want to make sure that you get next week's episode, make sure you subscribe to our channel and you click that bell button so that you know when we've uploaded the next unit number 3. Now, you got to hit that bell button twice because you've got to select all. That way you know when we go live every Wednesday. We're live at 5 doing our show live that airs on radio on Saturday. And then you'll also know when we upload the next video. Okay, so going on to our next slide. Let's see, Matt, I can't get it going for some reason. Maybe you can move it for me.
I think it's because I clicked.
All right, there we go. So responsibilities of homeownership, and this is very, very important. And I did put #adulting. So basically, you've got your responsibilities, which are your property taxes. Those do have to be paid. Even if you make your mortgage payment, if your property taxes are not part of your loan and you are responsible to pay those on your own, if you do not make your property tax payment, you could lose your house. The county can come in and take your house from you. So please make sure that you are responsible. You're getting into a home that you can afford. If you can afford a monthly payment that includes the taxes and the insurance and HOA dues if you have them, and we'll talk about those in a minute. But if you can afford the entire ball of wax all into one payment, then you know that you're getting into a home that you can afford. If you need to make the taxes and insurance a separate part of your payment to afford the property, you're going to have a really, really hard time paying that tax bill when it comes due, twice a year. So just keep that in mind. Make sure that you are budgeting for a price and for a payment that you know is going to be comfortable for you to make. Your insurance, let's say you own the home and you let the insurance policy lapse. Again, if it's part of your mortgage payment, the bank is going to make these payments for you, and you're not going to have to be concerned about policies lapsing or forgetting to have made the payment or not having the money to make the payment. But if you choose to pay those separately on your own, if you do not renew your insurance policy, and it could just be an oversight, and your property burns down, you have no insurance to rebuild. So that is one of the responsibilities of homeownership. Make sure you keep your taxes and your insurance paid, always on time, never late, never lapse in coverage, or you really could be in serious trouble should something happen. And remember that homeowner's insurance is not just for fire. If somebody was to slip and fall on your property, it's going to cover you for that. If there was a major water leak, pipes bust and break and just destroy all kinds of things on the inside of the home, it's going to cover that. So anything really emergency, that homeowner's insurance is going to cover. You absolutely do not want to let that go. So again, responsibility of homeownership. Repairs and maintenance. If you rent right now and something breaks, what do? You call your landlord. Hey, dishwasher stopped working. Hey, washer and dryer stopped working. Refrigerator broke. Pipe broke. It's leaking. It is raining in my living room. These are things that you would call your landlord, and your landlord would come out and fix for you as a tenant. Now you own the home. You are responsible for all of those repairs and making sure that everything is working, or you don't have anything. So one of the things to keep in mind, again, it comes down to the adulting, to the budgeting when deciding what should I buy, what can I afford. You need to make sure that you've got enough extra that you can put a little bit away every single month so that should something happen, you've got that money to go to repair it. Your hot water heater could go out. You might need to replace some electrical. You just don't know what it could be. Your roof might need some fixing. All of a sudden, it's a big rainstorm and you've got a leak. And you usually don't know. Everything's fantastic until that rainstorm. So just keep that in mind. You do need to make sure that you're responsible for your home, you're maintaining it, you're keeping up on the repairs, and that is going to be a little bit of extra money that you need to make sure that you set aside. So budgeting is really the biggest part of the responsibility of homeownership. And it's something that we need to make sure that we're looking at and we're taking into account when deciding what sales price to put you into and what monthly payment is going to be comfortable for you. So last but not least are your HOA dues. If you buy a home that has a homeowners association, or you are looking at condos or townhomes, those are going to have homeowners associations as well. If you do not make your association payment, they can lien your home and ultimately they could foreclose. So you do need to make sure, again, that you're keeping up on those homeowners association fees, that you're paying those every single month when they're due. Don't get behind on them. Once you're behind, it's harder to catch up, trust me. And, just make sure that, again, that it's part of your overall budget. So I think that we've done a pretty good job at hitting on all of the benefits and responsibilities of homeownership. If you budget right, you get into the home that you can afford, then there is an absolute benefit to homeownership. And if you don't own a home, no matter where the market is at, you should be working on a plan. You should have a game plan in place. You should know what you need to do. You should know how much money that you need. You should know where your credit score should be. And you should be ready to pull the trigger once you get to that step. How do you know if you're ready? Well, you have to call me and you have to talk to me. We've got to go through you. You might find out that you're ready today. And you might find out that you've got some work to do, either saving or credit, whatever that it might be, income. Hey, self-employed borrowers, maybe we need to claim a little bit of that money that you make. So just something to keep in mind. But how do you get that game plan? Where do you start? What's the first step in the process? You give us a call. It's 844-935-3634. And again, if you have any questions whatsoever, please put them into the feed. We will go ahead and we will answer those for you. I will respond to you. You want to reach out to the office, please give us a call. You want to go to mortgagemomradio.com and send me a message. That's fantastic too. I love email. And download that phone app. Text the word mom to 36260. Get that phone app. It's just literally a wealth of tools at your fingertips. I hope you guys enjoyed this one. Next week, we're going to be moving on. What's next week, Matt? Where are we at? Go to the next slide. let's see what next week's, let's give it a little preview. Ooh, loan programs. Next week, we're going to be talking about loan programs. We'll get into Fannie Mae and Freddie Mac, the conventionals. We'll talk about some VA home loans, FHA, jumbo, and USDA. And this one might actually take us 2 parts because that is a lot of loan programs to talk about, but we are going to go through each loan program and what they mean, what do they do for you. And so make sure you've hit that subscribe button. Go to YouTube, search Mortgage Mom Radio, hit the subscribe button, click on that bell, make sure you've turned it on to all so you know when we upload the next video. You guys don't miss out. We're going to be bringing these to you once a week until we get all the way through the end of the process. You've got your keys in your hand. I hope you enjoyed it. Please click the like button on the video if you did like it, you enjoyed it, it gave you information that you didn't know, and we'll see you next week. All right. Well, welcome back. Thank you so much for watching that. I really hope that it was beneficial to you. I don't see a whole ton of questions that came in, but we do have some comments. Matt, I'll let you go back up to where we left off and we'll go through those.
Okay. Aunt Pam let us know she shared the video. Thank you, Aunt Pam.
All right. Thank you so much. Appreciate it.
And then you thanked her. Heidi said Manny. Was there what?
Yeah, so I was talking about how, if your kids are able to stay in your home and not have to rent. Yes, and that would be Manny. And then I said, I'm not going to lie, I really do hope that Manny stays with me for a long time. I don't want him to go.
Oh, yeah, there you go. Yes, Manny will stay at home for a long time. Heidi said, love it. Go, Mom. Deborah over on Facebook said, your show is always beneficial.
Aw, thank you, Deborah. Appreciate that. And Deborah, you're not getting to see all of the comments that are going on in the show because most of the people watching are actually on YouTube. We love that you're on Facebook. We truly do. And you're more than welcome to continue to watch us there. But if you go over to YouTube, you would actually be able to see all of the comments that have come in from the beginning of the show. So everybody else that's out there watching, the same thing. If you guys like Facebook, if you like Twitter, one day I'm going to get... So I did find out, Twitch. Twitch. I did find out. So I had seen a couple of times that the real T-Bone 90 was watching the show. And I thought that it was one of my friend's kids just trying to help me out and get a Twitch person. Well, because he followed me, now I'm getting notifications when he goes live, and it's an actual real gamer that maybe someday will call us to buy a house. I'm super excited.
That's awesome.
That would be amazing.
It would. But everybody listening, guys, there's more going on YouTube than there is on Facebook or Twitch. But obviously, we want you to be able to watch where you like to watch. So just keep that in mind. If you feel like you're missing out on things, you're not seeing these comments come up, it's because it's going on in 3 different places. So.
Yeah, and then back over on YouTube, Soleil says, thank you once again. I'm always learning something new.
Aw, you're very welcome, and thank you for being loyal to us. We love it. We need a couple of viewers every week. Very good. All right. So, Heidi, you don't get to see me film these because obviously you're in Arizona and not seeing me do it. I just tell you as you're working away, hey, I'm filming another one, and then we get on here, and you have to actually watch it live while it's going. Just like everybody else. So was there anything that I said that you feel like you wanted to comment on?
Well, so I'm going to give you a little background. So
Sure.
Recently, some very, very close friends of mine, they have been living in this rental for 5+ years. I'm probably off. It could be 10+ years. They got a notice on their door that the house sold and they had to be out in 30 days. Mm-hmm. So they have been planning on buying. So they didn't want to move. They didn't want to change anything. They're actually planning on relocating to another state. This happened December 1st.
Oh, wow.
So the point you made is so important that people really do understand is that when you are a home buyer, no one gets to do that to you, right? They've been making their payments. They're great tenants. They take care of the house. They actually even repainted the whole house. They did stuff to the kitchen at their own cost because they've been there so long.
Mm-hmm. Yeah, well, because you want to like where you live, right?
Right.
Yeah.
And, they have pride of the home, even though it wasn't their home. So during the holidays, costs are high, everything, and they don't want to rent again in an area they don't plan on living in.
Right.
So they have now had to find another place to temporarily rent while they're looking for a home to buy because they wanted to move out of state.
Yeah, and short-term rentals are more expensive for sure than getting a long-term rental.
Right. Very expensive. It was a very expensive move because it was very quick, short notice, had to find people during the holidays. So just kind of an example of something that just happened to very good friends of mine. They were so upset, and all they got was a notice from the landlord, and all they had to give was 30-day notice.
Yep. Yeah, as long as your lease, if you've been in your lease, and what happens a lot of times is that you sign a 12-month lease. And then after that 12 months, it just goes month to month, and you don't think anything of it, and you've been living there for a really long time, and it's not the anniversary date of the lease that you're going back to the landlord and saying, hey, do we need to sign more paperwork? So if you're on a month-to-month rental, that's all they have to give you is a 30-day notice. That is it. And you're
Right.
out, and that is one of those pieces where I was saying security, and do your friends have kids?
Oh, yeah.
Yeah.
Yeah, they have 3.
Yeah. So you've got kids in schools that you don't want to move them. They weren't really ready, to make that move. So, it is something that, again, there is never a bad time to buy. There's just a bad time to sell. And if you're budgeting correctly and you can afford the payment that you're getting into, then even if the property values were to drop, you can still afford your home. It's still your home. It's your house. It's where you're digging your roots and you're planting them, and just give it time. It's real estate. It always goes up. It always goes down. And when it goes back up, it's always going to go further. So it's never a bad investment, ever. It really, truly isn't. And especially right now, they're talking about how in the 80s there were tons of, all of a sudden, like a huge boom in children, kind of like the baby boomer time, and late 70s, early 80s, and that we're seeing that again right now, and that with all of the millennials that are out there, they're all going to start coming into home ownership, and there just aren't enough homes. There aren't enough properties. And if you think it's hard today, it's just going to get harder and harder and harder, and property values are going to keep going up. I'm sure that we're probably due for a correction. I'm sure that once all of this cough stuff is over, we're going to see people come off of forbearances, and they're going to have to make payments. And if they don't have a job, everybody's got equity right now. This is Mortgage Mom's thought process, but we are not going to see a major crash. We're going to see some correction. We're going to see some more homes on the market, a little bit more of a buyer's market where they've got a couple of extra properties to choose from, rather than, I looked up the area that we live in. To give you an idea, we live in Santa Clarita Valley. We are a very, very large valley. Heidi, do you have any idea what our population is in Santa Clarita?
I have no idea anymore. It's grown so fast.
So I'm going to guess we're somewhere around 400,000. Maybe more, but I'm going to guess.
Maybe more.
Let's just say 400,000. I looked in Santa Clarita for single family homes. That was it. 3 bedrooms, 2 bathrooms, single family homes in Santa Clarita Valley, and 64 properties came up for sale.
Yeah.
64. When there are only 64 properties, I'm guarantee you that there are more than 64 buyers looking for a home. So property values are going to increase. When there is more selection, when there are more properties on the market, we're going to see property values stabilize. We might see a little bit of, a little bit of arguing, a little bit of warring between neighbors that might need to sell, and we might see property values come down a little bit. But everybody's got equity right now. Nobody is in a position that they're going to be upside down, that they need to walk away and they're going to foreclose. So we're not going to see that massive, massive crash that we saw in 08, 09,
08,
to 10,
09.
right? 10.
Right.
I just don't believe it. And again, this is my opinion, right? And it's just my opinion. I've been around the block a couple of times, started in the business in 94, and parents were in it well before that all I did was heard about it all day long, every day growing up. But this is just my opinion, the way that I look at it, right? If I was struggling, I couldn't make a payment, I'd been in forbearance, and all of a sudden now payments are due again. I lost my job. I never got it back. Unemployment's gone. What do I do? Well, I sell my house because I'm not going to lose my equity. I'm not going to walk away, or I'm not going to just live in it until it forecloses. Why would I do that?
Right. And I'll tell you right now, so I've got someone else looking to move out towards my area. Okay. Not quite my area, but within the general vicinity.
Stop gaining friends
And-
over there. I don't
know,
need you
I'm
to
sorry.
stay there forever. I'm hoping that you hate it and come home.
I'm never coming home.
Okay,
I love you, but
fine.
I'm never coming home.
Fine.
But right now, they just sold their property, sold another property. So they want to rent short term just to get a feel, right? They're not crazy like me. They don't pick a picture off of Zillow and say, that's
Make
my
an offer.
house.
Sure. Yeah.
Right. So they're looking for 3-bedroom, 2-bathroom, smaller home. $2,500 is the average cost for a rental right now in Arizona between Mesa, Tempe, general Phoenix,
Chandler.
Arizona area.
Yep.
Chandler.
Yep.
For a 11 to 1,200 square foot house. And they don't stay on the market more than 2 days.
Wow. Yep.
You can't get them.
No. So if,
And the prices are going up, and you could buy something for that
yeah.
for your mortgage way less
A
than
$2,500 mortgage. I just actually ran these numbers the other day, and this was California that's got more expensive taxes than Arizona does. In California, a $2,500 a month payment with 5% down payment, when I ran the numbers, was a $400,000 property, and that was for a condo with HOA dues of $350. The single family home was $475. Around the Phoenix area, depending on where you go, there's Queens Creek and there's Chandler and there's, all kinds of great areas, Tempe. You can absolutely buy a 3-bedroom, 2-bathroom house for $450,000. And if you can get in with 5%
Easily.
down or 3% down on a conventional loan, which conventional loans will go with low down payments, talked about that a little bit earlier today.
Yes.
You can absolutely own a home for $2,500. And to be honest with you, that is very close to what the typical rents are. Right now in California, $2,500 will get you like a 1-bedroom apartment.
Right.
So, you can
Yeah.
but you can still buy a condo in California for $450, $400,
Absolutely.
So-
And, I'm saying in Arizona because it's unheard of, right? $2,500, 3-bedroom, 2-bathroom, maybe. For $2,500 rental, it's unheard of in Arizona. But
Yeah.
that's what they're going for, and you can't get them.
Wow.
But you could buy a house for $450, $500 out here based on property taxes with 5% down and have your payment be that or maybe less.
Right. Yep. Nope. Absolutely. So homeownership is the key. It's, 2021. It's the beginning of the year. We're really focusing on our home buyers. We want to make sure that everybody buys a home. Everybody gets into a property. Everybody's got their security. They're all building wealth. They've got their tax deductions that they need to get a little bit bigger return. If you pay rent $2,500 a month right now, by the time that you're done with what your refund would be, because you get to write off those taxes and insurance, you could probably be looking at a home that's got maybe a $3,000 a month payment, $2,800 a month payment, because you're going to get a bigger return at the end of the year. So you can kind of subsidize that monthly, right? So, it's definitely something that we want everybody to think about. We're trying to push that subject here at the beginning of the year. But before the show is over, we've got a lot of people that listen to us that are not buying a home. They're homeowners. They own a property, right?
Yes.
And so we do need to talk about those people as well, because there's we've got a lot of people that want to refinance, a lot of people that need to refinance, that haven't refinanced yet. So I don't know if you got on today, but I was watching, it was a Facebook thing that went on, and it's a private page with Movement Mortgage for loan officers of Movement Mortgage. And it was with Barry Habib. Did you see that one by any chance?
No, someone had me really busy today.
Yeah, I know. I'm sorry. Anyway, so Barry Habib is our guy. He actually, it's a mortgage market guide that he runs, and he's been, in this business for a very, very long time. But he runs a company that basically works with mortgage loan officers like me and helps us to try to time the market the best that we can as far as trying to lock in a rate. Is it a good time to lock? Alert to locks. We'll get those text messages. We'll get alert to floats. Hey, bond market's on fire. Don't lock today, because you're going to have clients call you in a week from now and say they want a better rate. So you wait, you float, right? So he helps us to kind of navigate the the rate locks and, the market itself and the bond market and all the mortgage backs and treasuries and everything that nobody else understands anything about. So Barry was on today, and we've definitely seen last week rates were better than they are today. On Friday last week, rates started to tick up a little bit. Monday got a little worse. Tuesday got a little bit worse. And today, Wednesday, they actually came down just a tad. And he actually got on and kind of did a presentation for us, which was really nice. And, he was talking about those mortgage-backed securities and where he thinks that interest rates are going. And we get this question all of the time. I've had questions at the beginning of the year that said, it was actually end of December, do I need to hurry up and lock something in before January when the new president gets inaugurated? Are rates going to go up? Look, they don't happen overnight. That just doesn't happen. It's typically a slow climb, right? But the forecast for the year is that we are actually, we tipped the scales in the middle of December to be back where we were at the end of February, beginning of March. And me and Heidi have said numerous times that those were the lowest rates we've seen ever. And then we did go up because everybody was panicking over COVID and we didn't know what the heck was going to happen. And then they came back down and they stabilized. But he was saying that we finally hit kind of that landmark in December. And now what they're seeing is that they do think that we're going to see interest rates come up. So not a lot, not a ton, but they do see we're already on the way up. We might get a couple of little dips and then a little higher and then little dips and then a little higher, just like we do when we fall. We fall and then dip up and then fall some more and dip up, right? It's kind of that M pattern or W pattern if you guys are stock people and you kind of understand what I'm talking about. So they are anticipating that interest rates are going to come up a little bit. They're kind of expecting that rates are going to settle in about 3.25%, 3.5%. Let's just face it, interest rates at 3.25% and 3.5% are phenomenal. Right. Right? So that doesn't mean that they're horrible rates by any means whatsoever. But right now we are still under 3% on most loans. And when I say that, obviously interest rates are based on what kind of loan are you doing? Are you pulling cash out? Are you not? Is it an investment property? What's your FICO score? What's your loan to value? We need to go through all of those things. But assuming that you have just got A+ credit, tons of equity, you're just trying to reduce the rate on your loan, we're still under 3% right now. So knowing or hearing that, I wanted to bring that information to everybody that is listening. If you have thought about refinancing, but you just haven't gotten your butt out of the seat to do it, and trust me, I understand there's a lot that you have to do. You've got to pull all those documents together. It just kind of seems like it's so much work, right? But
it feels exhausting in your head before you even start.
Yes, it does. And it did to me. It literally, right? I watched all of these people. I helped all these people do a refinance. And finally, I pulled the trigger myself to do one in October. So I didn't even get the very best interest rates that had ever been out, right? And I should have. I knew. You knew. Right. We were working 15-hour days trying to get every single person that called us the rate that they wanted, the loan put together, it submitted, it locked, everything that needed to be done. So, if this just helps you in any way whatsoever, if you have not done it yet, do it. Do it. Call us. Get it started.
And most importantly, if you have mortgage insurance, you most likely have equity.
Yes.
Let us look at that and see if we can get rid of that mortgage insurance.
Yes.
Because that is a payment that you don't need to make anymore if you now have the equity in your property.
Yeah, so that was another thing that Barry actually touched on. So he was talking obviously to loan officers and, kind of helping guide us with what's coming up for the year, how busy are we going to be, where are rates going to be at, right? And that was actually one of the things that he touched on. And he's inundated in this business because he is coaching and sending out information that we need to have to do our job successfully. So one of the things that he actually mentioned was if you bought a home a year ago and you put 10% down, you probably, the majority, have already gained the 10% equity that you need to refinance and remove the mortgage insurance. Not only that, but if you bought a home a year ago or longer, the interest rates today are lower than they were a year plus ago. So not only can you lower your rate, even if it's a small amount a quarter, but you can also remove the mortgage insurance, which drops your payment dramatically. So there are a ton of people out there that don't even know that they have that possibility of doing that refinance to get into that lower monthly, better financing terms. So I'm happy that you brought that up, because property values have gone up, and they've gone up fast. And this is when you need to take advantage of it.
Absolutely. I mean, so many people have mortgage insurance and they don't even think about it anymore, right? They did the loan.
They've got it on auto pay.
It's on auto pay. I mean, I can't tell you how many subscriptions I have on auto pay that I don't even know I belong to.
Yeah, I told Matt the other day, I think we need to go through my credit card statement and start getting rid of subscriptions, because I'm paying for like PicMonkey, and like he's like, "What's PicMonkey?" I go, "I don't know."
I don't know, but they keep charging me.
Yeah. I mean, it's like, $9.99, so you don't think about it, right? It's like $9,
right?
And you're
but I mean, when stuff's on auto pay, we have clients that call and we say, "Okay, what's your mortgage payment?" I don't really know.
Right.
I mean, even me, right? Because I pay more than my payment. I can't actually tell you how much my payment is. I can tell you how much I pay.
Sure. Yeah.
But not the exact amount of my payment.
Yeah.
Because it's on auto pay, and I said, okay, pay X amount per month, period.
Right.
I don't actually know how much my payment is.
Well, and that's actually something very important. So if you're going to call us to talk to us about a refinance, please have your mortgage statement in front of you. The biggest question that I can never get an answer to is, okay, do you have any idea how much your property taxes and insurance cost you per year? Nope. Okay. Are they included in your monthly payment? Yes, they are. Fantastic. Yes. Do you have your mortgage statement in front of you? I don't. I probably should have been prepared when I called you. But, okay, don't worry. We're going to get through this. Okay. So do you have any way to grab your mortgage statement or get online right now while we're on the phone? Oh, I can. And so then that's when I'm asking them, okay, in your mortgage payment, it's going to say principal and interest, and then it's going to say escrows. And we talked about escrows in my workshop last week, right? So what is that escrow amount? That is your taxes and insurance. So now I can calculate what a new payment will be, add the escrows, and give them a very good understanding of what a refinance might do for them. So, the other last thing that I do want to kind of touch on, and then I don't know, where are we at, Matt? We're at 3 minutes to go, right? Mm-hmm. Okay. So for radio on Saturday morning, I'm going to actually shut this off right here. If you guys like something that you heard, please give us a call. It's 844-935-3634. Subscribe to the YouTube channel, please. You guys will get so much valuable information if you just watch these, and we'd love to see you watching it with us and asking us your questions as we go. If you're a brand new home buyer and you guys are trying to do that for 2021, subscribe to the channel so that you know when we upload those brand new workshops. You're going to get one every week until we go from start to finish, keys in your hand. So please make sure that you guys do that. It's Mortgage Mom Radio everywhere you look, and you guys can find us. So we're going to continue to go. So anybody, again, listening on Saturday morning, if you guys like what you're hearing and you want to continue hearing where we go from here, make sure that you subscribe to the channel so you can go back and watch what we did, or join us live on Wednesdays, and then you can get to the part of Mortgage Mom After Dark. So we hope that you guys have a fantastic Saturday, those of you guys listening on Go Country 105, and bye-bye.
Have a great week.
All right, so we're done now with radio, right? So now we're going to get into the later stuff. So one thing last that I wanted to kind of bring up is cashing out, right? Right now, everybody's property values have gone up so far and so fast. I mean, I'm not joking when I say fast, right? There is equity. Do you need to do your kitchen? And again, I'm not trying to promote that you guys redo a kitchen that was just done 5 years ago. Let's face it, home improvements really do last a long time. But you guys have heard me talk. I did buy a house. It was built in 1982. My kitchen was from 1982. Imagine the oak. The oak.
It was beautiful. I don't know what you're talking about.
I don't even know if it was oak. I mean, it looked like like walnut color, but it was like oak wood everywhere. Only one sink worked, so we had to literally turn the water off because remember those old ugly crystal handles that were for the cold, right? And hot?
They hurt your hands when they wouldn't turn.
Right. And they're big. They were big, right? And they weren't even crystal colored anymore. They were like yellow because I don't know, water gets up inside of them and you can't clean them out, and they're half like white and crusty. And
yeah.
doesn't matter how much you clean, because I'm like crazy clean freak and it didn't work.
You can't clean those things.
No. So, but one of them just continuously leaked out the bottom where it was connected to the countertop, right? The
Good.
countertops were that old school plastic marble that was supposed to be white, but it was actually yellow.
Yep.
And the bathtub, for some reason in the 80s, they thought it was really cool to have like a plant sanctuary
Yes.
as part of your bathroom. So my bathtub was like in the middle of the bathroom, and then there was like this big giant opening before you'd get to like the wall. And it was supposed to be so you could put plants in there. Well, the people before us that we bought the house from had plastic plants in there, because I'm going to assume that you don't want to crawl through your bathtub and over to the other side to water your plants. So they had plastic. The smell was unreal when we bought it. So we throw away those plants. They never finished the floor in that area. The floor was still like, I don't know. What's that thin cardboard stuff? It's not
like
card.
pressboard?
Yeah. It wasn't good. That's all that was there. There was no flooring. They didn't finish the flooring back there at all. At all. So you got this tub. You got all this room. You've got plywood. It was basically plywood. I think it was plywood. Plywood back there. And, you got anyway, it was time to redo it, right? So we're not advocating for people to just pull out money and start remodeling just because. If you need to do it, this would be a fantastic time, because property values are up. If property values drop and in a year from now you wanted to be able to do that, if you don't have the equity, we can't give you the money, right? So this would be a fantastic time to pull out the money to do those repairs that are needed.
Yeah, like had I not just bought my house,
Right.
I need all new windows.
Oh, right now in the brand new house?
Yeah.
Oh, what?
Yeah.
I thought your house was built like in 2000-ish.
It was.
Okay.
But in Arizona, the heat, the sandstorms, the rainstorms, whatever they call them out here, really does some damage. The monsoons. They do some damage to your windows.
Ooh.
Yeah. So some of mine don't close. Some of them don't open.
Oh.
The ones that don't open aren't a problem. It's the ones that don't close that are a problem.
But didn't you guys do a physical inspection when you bought it?
Yes, we knew that was a problem.
Okay. So you knew when you bought it, and you've got to do windows.
We knew.
Okay.
Yeah.
Okay.
We knew. And we can actually, in Arizona, they repair windows. Different. Not something I knew about.
No.
But I would rather have them replaced.
Sure. Mm-hmm.
Because I don't want to pay to repair them to pay to repair them to pay to repair them.
No, because you're going to pay to repair them and then pay to repair them again. And by the time you're done, you should have just bought them new.
I should have just replaced them.
Yeah.
Right.
And
I
you're
would
very
just-
lucky that you could probably buy the windows and you could have your husband put them in. He may not want to.
Right. Yes. Yes. We'll be talking about that later. But yes.
Aunt Lori says,
There's a lot of windows.
I have 70s countertops, yellow and gold.
Yes, she does. Mine were pretty close, Aunt Laura, pretty close for sure. And Aunt Lori just had to replace her water heater, right? I'm pretty sure that was supposed to happen today. So hopefully it did. Aunt Lori put something in the box. Let us know that you got that done. So I know that you're taking a hot shower. That's very, very important. But there's a lot of people out there that have those things that need to be done. And it is really hard to budget for it. And you say when you buy a house, I'm going to budget. And I'm going to put the money to the side. I'm going to put a little bit at a time in there, right? And then you have kids. And the kids need something all the time. There is never a time that a child does not need something. And so it is and it doesn't even matter. Aunt Lori's got one of those blessed children who get to live for free at home, and she's 30. I love you,
Right.
Tara. I love you. But, that's what I was saying. Like, if you have that possibility, you have that opportunity and you don't have to rent, fantastic. But even I'm sure when you've got kids living with you, no matter the age, you're a parent, you want to do what you can, you want to help where you can, even if it's just a cell phone bill that you're paying for, right? It makes it difficult, to put that together. So right now, when property values are up, if there are really important things that you need to get done, this is a perfect time to be able to take that cash out and get those improvements finished.
You know what? I'm with you. I need new windows. Christopher just made the JV team for baseball, and now he's a catcher.
Nice. So you need all the catcher's gear, which I think I gave you some, but he's probably outgrown it all.
Yep. So we get to start over with catcher's gear.
I love it. I love it.
Who would have thought?
Right? Exactly. Oh, and it's not cheap. It is not cheap at all.
I am going to buy the cheapest stuff they make.
Uh-huh.
I just want you to know.
Is Play It Again Sports still around?
Oh, geez, I don't know.
I don't know.
You know, where you can get like the secondhand stuff, or you need to check like eBay. You need to check those Facebook sale places.
I am going to be buying everything used that I can possibly get, other than his cup.
Yeah,
he'll get that new.
Yeah. Well, I would hope so. I would hope so.
If he's a good kid.
Yeah,
we'll see.
Yeah, well, you know. All right. So Aunt Lori says yes on the hot water. And then I can't read the next one. What does that say?
It says, I have no vision, ... kids, and then a bunch of emojis.
So I don't know what that means to you.
Nope.
Aunt Lori, you got to explain a little bit further for us. You got to tell us. We don't know.
Got nothing.
I love it. Anyway, so, that is, I would say we could probably cut it here for the show. I think that everybody kind of got the point. Literally, Debbie, you need to visit soon and design my house. Oh, I got her. I got where she's going with
I
no
have
vision.
no vision.
Oh.
Yes, I got it.
Got it.
Yes.
For upgrading.
Yes. I love it. I would be happy to do that if I can visit Arizona anytime soon. I'm sure that Heidi would appreciate that as well.
It would be very nice.
Road trip. Taking the show on the road.
Home in the driveway.
Right? Yeah, we could do the show from the motorhome. That'd be fun. We've done it. We've tried. But I think we've got better equipment now that we could make it work.
Yeah, for sure.
Pretty sure.
I'll run the line through the window to the motorhome.
Yeah, for the internet, right? So
yeah, it's right on the side, right through here.
All right. We'll have to try it.
All
right. Well, I think that was a good show. We talked on homebuyer workshops. We've talked on refinances. We've told you where we think that the market's going in the future. If you guys have any questions, please reach out. That's what we're here for. We want to talk to you one-on-one. If you're listening to this at a later date, put your questions in the feed. It'll still notify us. We'll answer them for you. Please share this video. It is the only way that we are going to get out there and get subscribers and get people watching. If you haven't liked the video, please like the video for us. Please close your chat box and hit the like. Hit the thumbs up, please. We definitely need that. The more thumbs up we get and the more subscribers we get, the more traction that we make. And that is the goal of the show, and bringing you guys all of the free education that we do. So we hope that you guys have a fantastic week. We'll be back next week. Another part of the seminar, more refinance information. Soleil, we love you. Thank you for watching. As always, it was such a pleasure to talk to you on the phone. Looking forward to helping you. And you got anything left for me, Heidi?
No.
I hit
have a great weekend, or week, I guess. We're not there yet. Oh.
It's not the weekend
Have a
yet. We
great
got
week,
2 more days.
Great weekend.
Yes.
And we'll be back on Wednesday at 5.
All right. Bye, guys. We'll be live at 5 next Wednesday. Talk to you soon.
Bye.